Good morning, everyone, and thank you for joining us. My name is Jason Cogdell, and I'm the General Counsel and Benefits Attorney for ProBenefits. And on behalf of my team and all of our team at ProBenefits, thank you for your time today. And it's good to be with you for our monthly client webinar. And this is our annual update on Form 5500 filings for health and welfare plans. Since the standard primary annual deadline is July 31st, for calendar year plans. So calendar year 2017 plans will file at the end of January. And that's when probably roughly half of employee benefit plans are filed from a Form 5500 perspective. We try to do this annual update either in March, April, or May, just to give a little bit of advance notice. We've got some large employers on the session who are used to filing 5500s. We've got some employers that may be doing it for the first time this year, or others that want to make sure that they are either subject to file or exempt, and I'll help you go through that. And we've got plan advisors on the session as well. So whatever brings you to the session today, thank you for joining us, and I hope that you'll find this helpful. If at any point you cannot hear clearly, you may want to switch from the phone to speakers or vice versa. Make sure the volume is turned up. As always, we're subject to the whims of the internet connection, but hopefully that'll work well today. And I know most of you are familiar with GoToWebinar. We're not going to take live questions today, but you can submit questions through the question box on the control panel. And if you'll submit those, those will come to us, and we'll try to answer them all today. But if not, we'll follow up with you after the session. But your questions during or after the session are certainly and always welcome. Before I get into the main 5500 topic, I want to share a couple of quick updates with you. First, I'm very excited to share that we have recently hired a new attorney, Laura Bibb, who's listening on the session today, and she will not be presenting, but you will hear from her on some upcoming sessions. Laura is a longtime colleague and friend of mine who's been in private employee benefits practice for the last 6+ years, and just a very knowledgeable and talented attorney. We're very fortunate to have Laura join our team. Her position is Senior Compliance Counsel, and in that position, she's going to be doing a number of things, including what's most important with our job is making sure we do the compliance for the employee benefit plans that we administer. Laura will also be coordinating our compliance services, including our Form 5500 service. So I'm very excited to have Laura and look forward to you getting to hear from her in upcoming sessions. This week, you'll receive a copy of our monthly compliance update, which will include information on the recently adjusted Health Savings Account Family Maximum for 2018, so be on the lookout for that compliance update. And finally, we have been revamping, enhancing our already successful WRAP SPD service. And since the WRAP SPDs have an impact as an ERISA compliance tool, they have an impact on Form 5500 filings. I'll mention some aspects of that as we go through, but if you would like more information on our WRAP SPD service and whether or not your organization should consider a WRAP or should consider updating the WRAP, let us know, and we'll be happy to assist you. This session is going to focus on the topic of Form 5500 filings for health and welfare plans. And in doing that, I'm going to provide a brief refresher on what some of the basic requirements are. And I thought what might be very helpful to some of you today is to look at some live filings. And we're going to look at some actual Form 5500s filed by 3 different employers and under 3 different filing scenarios. And so you can see what those filings look like and how those scenarios may relate to your organization or for you plan advisors, organizations that you are counseling. We'll talk about some common compliance issues. Those of you that have heard me before know that I don't like to focus on the problems and the scare tactics as much as the best practices and how we can do it to avoid the problems and for there to be no need for scare tactics. And then I'll share a couple of other updates as well. The big picture, why is this topic important? First of all, this is a key compliance requirement for health and welfare benefit plans. So when employers sponsor health and welfare plans as valuable hiring, retention, and protection tools for employees, as everyone on this session knows, those benefit plans come with certain strings attached. There are plenty of benefits within the benefits, not only the coverages themselves, but there are plenty of tax benefits. But there are requirements that employers have to follow to be able to offer those employee benefits to employees. And this is one of those compliance requirements that comes along as part of the cost of doing business in the employer provided benefits area. Second, Form 5500s are formal governmental filings. They're filed with the Department of Labor, but they're accessible by the Department of Labor and the IRS. So in that sense, Form 5500s are no different than the corporate tax return. The forms 1094, 1095C that are part of the ACA and other important annual governmental filings. These are important. They must be done. They must be done right by employers, and that's part of our goal in assisting you with this service. We've been doing Form 5500s for roughly 10 years now, and it's been a very successful service. We've learned a lot, but it's another way we can help employers with compliance, which is part of our mission. And of course, as I mentioned, it's a big deal in most of the time with filings that are made to the government. Big deal means there are penalties if you don't do it or if you don't do it on time. And that's certainly true with Form 5500s. Many people would be shocked to know that the potential penalty that the DOL could assess for a late or missed filing goes all the way up to over $2,000 per day. And that's a crazy high number. And no, the DOL doesn't normally assess penalties that high, but that's what the statute and the law allows them to assess for employers. So it's a big deal. Let's get it right. We don't have to worry about what the penalties are. Now, in terms of context here, Form 5500s are part of ERISA. ERISA is the federal employee benefits law that's been around now for 40 years, and it governs all employer-sponsored benefit plans. So ERISA applies to retirement plans as employer-sponsored plans and health and welfare plans, and we're focusing on health and welfare plans. ERISA includes several different components: claims and appeal guidelines, fiduciary responsibility, the requirement that all employee benefit plans have a plan document and a summary plan description. And the 5500 component, otherwise known as the ERISA disclosure requirement, is the requirement that ERISA plans sponsored by an employer that are subject to ERISA, must be reported to the Department of Labor on an annual basis. And so that's where we come in with this topic. So it is an ERISA benefit generally enforced by the Department of Labor, although again, the IRS has access and authority over Form 5500s as well. Now, the basics. What employers must file? The employer must file a 5500 if it has benefit plans subject to ERISA. So for example, if an employer didn't sponsor any employee benefit plans or any benefits provided by the employer were not subject to ERISA, no Form 5500 would be required for that entity. The only full exemptions where the employer does sponsor an ERISA plan or more ERISA plans, but is exempt from filing. The only two exemptions there are in the statute: churches, and that includes church-sponsored or related entities, and then governmental entities. There are no other exemptions. You all may know, and this will be one of our filing scenarios that we look at, is that retirement plans must file 5500s regardless of size. So any employer that sponsors a retirement plan subject to ERISA must file a Form 5500. Most of the time, employers, however, do not know much about those retirement plans because the retirement plan 5500s are typically prepared by the third-party administrator for the retirement plan, and the employer has very little to do with it other than just signing and submitting it. So employers typically don't spend a lot of time on 5500s for retirement plans. Now, back into our world with health and welfare plans, all health and welfare plans are generally required to file. However, many employers take advantage of a special exemption that says that the employer or the specific plan does not have to be filed if it has less than 100 participants. And participants for this purpose means employee participants, not spouses and dependents, and measured on the first day of any plan year. So that allows small plans with under 100 participants, to be exempt, and the only exception to that is if the plan is funded by a trust. So I won't go much deeper into that other than to say, generally speaking, if the employer-sponsored ERISA plan, health, dental, vision, life, disability, FSA, HRA, or other plan providing the type of benefits that ERISA governs, if that plan has less than 100 participants, it will generally be exempt. unless a trust is involved. And we don't see a lot of trusts. They do happen, particularly in some very large plans, associational plans, MIWAs, VIBAs, that type of thing. We don't need to get into that. Let's focus on the basics. If the plan is under 100 and there's no trust, it's exempt. If the plan had, on the first day of any plan year, 100 or more employee participants, then that plan is required to file. And that filing will be due by the end of the 7th month after the plan year. So I said earlier that calendar year 2017 is due July 31st of 2018. So end of the plan year, December 31st, add 7 months, July 31st. That's the deadline. So the employer can file anytime, but that's when the filing is due. An employer that for some reason cannot file on time, either it just doesn't have its information together, or maybe hasn't been able to get a particular carrier schedule that might be needed, there is a 2.5 month exemption that cannot be automatically granted for that employer by filing by mail. IRS form 5558 is listed on the screen, but generally 7 months is plenty of time for the employer to get the information that's needed and get that filed in a timely manner. Just to add a further illustration, this month we file 5500s for several hundred employers all across the country in various scenarios, and there are 5500s due every month. So that this month, April 30th, which will be a week from next Monday, April the 30th is the filing deadline for plan years that ended September 30th of 2017. So let's say this plan year was October 1, 2016 to September 30th, 2017. Again, add 7 months from September 30th, that's April 30th. Those plans are due to be filed by April 30th, if not extended. And those are the filings that we're in the process of completing now. Many April 30th filings have already been done. So this is the standard filing schedule. Now, what must be filed? I'm not going to go into too much detail at this particular time about the types of benefits that ERISA governs and it must be filed, but here's a list in case helpful to you. But again, the short story is it a group-sponsored plan subject to ERISA? If so, it must be filed if there are 100 or more participants on the first day of a particular plan year. What is the plan year, by the way? It's whatever the employer wants it to be. Most of the time, it's the benefit year that the carrier or the third-party administrator considers to be the plan year. But the ERISA plan year doesn't always have to match the benefits year. And so the employer does have discretion in what the plan year is, but most of the time it makes sense for it to track the insurance renewal process. But medical plans, whether fully insured or self-funded, are subject to ERISA. Dental, vision, life, and AD&D plans, long-term or short-term disability. Health FSAs are subject to ERISA, even though dependent care FSAs and the pre-tax premium part of the Section 125 is not subject to ERISA. HRA plans are subject to ERISA. Other benefits are subject to ERISA, but only if medical benefits are provided. That would apply to wellness programs, employee assistance programs. A recent example, telemedicine, which is an ERISA benefit because medical treatment and benefits are provided. And then ERISA includes other benefits as some are listed at the bottom of the slide. So again, the default is if it's a group sponsor benefit, is subject to ERISA unless an exemption applies, and that would normally be filed. If you have any questions about specific benefits, we'll be happy to get into that with you, but in the interest of time, I won't delve into that point any further. Now let's talk about a couple of filing scenarios. I'm going to show you 2 examples, and then we'll look at actual filings online that have been made by real live employers. The default is this. If an employer, and the one in this example as shown on the slide, is an organization that has a June 1st to May 31st annual plan year, and this organization has 6 ERISA plans: health, dental, life, short-term disability, long-term disability, and a health FSA. So this is a common scenario, nothing fancy here. This group has not implemented a WRAP SPD, which I'll mention later. So every benefit stands alone for purposes of ERISA. If there's no WRAP that pulls all the benefits together into a single plan number, plan name, then each benefit stands alone. So in this case, as listed at the bottom of the slide there, it's effectively as if this employer has 6 different ERISA benefits, 6 different ERISA plans. In this example, health and dental have their own cares, but life, STD, and LTD are all together. And then the health FSA, of course, is a self-funded benefit like the kind that we administer here at ProBenefits. So there's a third-party administrator. There's not a carrier involved. That's an employer-sponsored standalone plan. So the default here is that this employer is going to file individual 5500s, one for each ERISA plan that had over 100 participants on the first day of the plan year. So if any of those plans had fewer than 100 participants, they would not be required to file for the particular plan year. Let's just assume this plan year is the 6/1/2017 through 5/31/2018 that would be due at the end of 2018 if required. So the default is 6 plans, 6 filings. However, we think, and it's a practical approach, that if multiple plans have the same insurance carrier or the same third-party administrator, that they can be filed together because the employer is effectively administering them as a single plan, even if there's no wrap. So that's just kind of a practical solution that's common in the industry. So in this case, we're going to take advantage of it for the life and disability plans to file those as one plan. And that will reduce the employer from 6 filings down to 4. Plan 501 will be the group medical plan. 502, group dental plan. 503, life disability. And 504 will be the health FSA, which is a very simple filing and doesn't require an insurance schedule. Why are they numbered 501, 502, 503? This is just traditional practice. Generally, as you'll see when we look at these live filings in a moment, retirement plans usually start with number 001. And retirement plans can be anything from 001 up to 499. And most employers use 001. Health and welfare plans generally start with 501 and can be any number 501 to 999. Most of the time, the employer uses some number between 501 and 510 or 515, but the employer can pick whatever it wants. The key would be that whatever the SPD says as the plan number would also be in the 5500 and vice versa, so there's consistency. But this is the standard default filing practice for employers. 1 filing per benefit, 1 filing per plan. The alternative is the wrap plan. And what is a wrap SPD? Some of you may ask. Well, a wrap SPD means several things, but for Form 5500 purposes, it means the opportunity for employer to combine one or more plan, one to all plans into a single legal document, the wrap SPD. Wrap is short for wraparound. It means a document that supplements the insurance booklets, which are the default SPDs, to include whatever ERISA requires for content. And then also, as part 2, to merge and formally consolidate multiple ERISA benefits into a single formal plan with 1 plan number, 1 plan name, 1 Form 5500 filing. So many employers take advantage of this, and they use a wrap SPD for content purposes, and I won't cover that particular aspect of it in great detail today, and then for Form 5500 purposes. So let's say the same employer, looking back at the prior slide, has all the same benefits, but this employer has a wrap SPD. So instead of 4 filings, 4 different numbers, 4 different plan names and filings, this employer has a wrap document that pulls all 6 benefits into 1 document, 1 name, 1 number. Let's call that 501. Let's call the employee benefit plan the Acme Inc. Health and Welfare Benefit Plan, or the Acme Inc. Employee Benefits Plan. So only 1 Form 5500 is required. While I'm talking about it, on a later slide, it shows that one of the common compliance problems is the employers that file 1 5500 for multiple benefits, but don't have a wrap SPD. That's a problem. If you're filing 1 5500, there needs to be a wrap SPD. Similarly, if the employer has a wrap SPD, they shouldn't file multiple 5500. They should file a single one. And in this context, I'm using wrap SPD to mean a consolidated wrap SPD, which isn't the only way to do it, but certainly is the most common and popular way to do it. So those are 2 scenarios, and now I want to look at a couple of samples that I think may drive home the point and provide some illustration for what we're talking about. We're going to look at 3 employers, the first of which is ProBenefits. And I'm going to pull up the Department of Labor's eFast2 site. This is a site that the Department of Labor launched in 2009. And since the 2009 plan year, every 5500 filing has been required to be done electronically. Hard copy filing is a thing of the past as of the last 10 years. Every filing since 2009 that any employer in America has been done electronically and is publicly accessible through EFAS2. This is the front page of EFAS2. The website is efast.dol.gov, and that's in the slide, so you don't have to write it down. A number of resources are available at EFAS2, including some information about the Delinquent Filer Voluntary Compliance Program, which I'll mention at the end of the presentation. But for this purposes, we're going to do a search. And this search will allow you to pull up the filings of your own company or any other in America. And for plan advisors, it's helpful to monitor your client or any employer that you may be working with. So I'm going to click on Form 5500 search, and it pulls me to the search screen that shows here. And I know the text is probably small as showing on the slide. There are multiple ways to search, starting with plan name. One of the common ways to search is sponsor name, where you put the employer plan sponsor name, pull up the filings that way. In this case, since I'm going to pull up my own company and I happen to know our tax ID number, I'm going to search by tax ID number, which is, in my mind, the best way to search because it's going to limit it down to a single employer. When I pull up ProBenefits Inc., and I hope you can see that I can't make this any larger, unfortunately. You'll see that ProBenefits has plans listed under that tax ID number, and then in column 2, plan number, they start with 001. Remember that I said retirement plans start with 001. Well, ProBenefits, we're a small employer. We have just over 30 employees, so we are actually exempt from filing our Form 5500s for health and welfare plans. So we only file a retirement plan. So when you look at ProBenefits, you'll see ProBenefits Inc. Retirement Savings Plan. It's on a calendar year basis. We have recently filed ours for 2017 under that Plan 001. And if I click on the tax ID number here, it would actually allow me to open in PDF that 5500 filing. So you can do that for your entity or any others. Now, I'm not going to look at the retirement plan. That won't do us any good. But this would be an example of an employer that hasn't filed 5500s for health and welfare, either because A, like ProBenefits, that employer is exempt as an under 100 group, or B, that the employer hasn't filed yet. For example, if ProBenefits had 200 employees and we have more than 100 in our health and welfare plans, and I pulled this same result up and we hadn't filed, that would be a problem. That meant we had not complied, and now we need to consider ourselves out of compliance and deal with that potentially through the voluntary compliance program. But let's look at some other options of over 100 employers. I'm going to go back to the search screen. And since it's baseball season, I think it's appropriate to look at baseball clubs who do have to follow these rules. And we're going to look at last year's World Series champs, the Houston Astros. I don't know if we have any baseball fans out there, but we're going to pull up Houston Astros. Again, I hope you can see this. For Houston Astros, they've got the retirement plans. We're going to keep scrolling down until we see a number in the 500s. And we're going to get about halfway down, and we'll see plan number 501. Houston Astros LLC Group Health, Dental, and Flex Benefits. So this is, Houston has multiple plans here, 501, 502, and other benefits, the first of which is for health, dental, and health FSA. Under a particular tax ID number, this is their 2016 calendar year filing. So they're on a calendar year basis. That means their 2017 filing has not been filed yet because it's not listed here, but it will be due by July 31st. If I were to scroll down, I'll see that they also have Plan 502, Houston Astros LLC Group Life Independent Life Plan. All these are in order of when they were filed, by the way. They also have Plan 503, Long-Term Disability Plan, Plan 504, AD&D Plan. All of these are on a calendar year basis. They also have Plan 505. Actually, that's an old plan, excuse me. And then they have Plan 506, a vision plan. So we're going to look at Plan 501. So Houston would be an example of that first filing scenario, multiple plans. And this is going to pull up in PDF, and I'm going to try to expand this a little bit so you can see it a little bit better. This is going to pull up the PDF. So we see it's a calendar year 2016 filing for a single employer, the Houston Astros LLC Group Health, Dental, and Flex Benefit Plan. This is the base form, which is 2 pages. And then for any insurance plans with an insurance carrier, there are separate schedules attached. They're called Schedule A's. And there are other schedules besides Schedule A, but Schedule A is the most common one. We see that this is Plan 501, originally effective December 15th, 1977. You'll see that there's the EIN, the plan sponsor's telephone number, a business code, the plan sponsor's address. This was signed September 22nd by Vivian Mora, who I assume is the plan administrator for the Houston Astros plan. It was prepared by a law firm, it appears. Plan 2 has the plan participant information. There are a lot of codes here. You'll see down here in 8, if I can highlight that, there are codes that show what benefits. This particular plan includes medical, dental, and health FSA. The 4A, 4D, 4Q codes simply indicate that. There's a fully insured benefit, one or more, actually medical and dental, and then there's general assets box checked, and that would mean a health FSA or an HRA or a self-funded medical plan or other benefit. And this indicates that 2 schedules are included. Page 3 is the so-called M1 filing, which asks whether this is a MIWA, a multiple employer welfare plan, which this is not. This is just for a single employer. I'm going to keep scrolling down. This is page 4, which is the first of the insurance schedule, Schedule A. Those of you that are large employers know that you will get either from the carrier or your broker on an annual basis an insurance schedule. And they take different forms. Sometimes they're in letter form. Sometimes they're in chart form like this that show the annual amounts, premiums, commissions, participants, and other details about the insurance coverage. Those are schedules from the carrier. The data on those schedules is taken to populate these formal insurance schedules for purposes of the annual filing. In this case, the Houston Astros have health coverage through Blue Cross Blue Shield of Texas, and so the information about that benefit is there on the first page of the schedule. A lot of this isn't applicable to the particular plan, so I'm going to keep scrolling down until I get to the last page of that schedule, which shows which benefit, and this is health, and it also shows the total premiums paid down in Section 10. So you don't need to know the specifics of these plans, but just know the data that's coming from the carriers is going into a formal schedule, which is an attachment or addendum to the Form 5500. In this case, there's a second schedule as well for MetLife, and I'm just going to keep scrolling down through the schedule to see on the last page of it that MetLife is the dental provider. So in this case, there was a Schedule A for medical, Schedule A for dental, and then the health FSA as a self-funded benefit doesn't require a schedule. And so this is Plan 501 of the Houston Astros as I scroll back to the top. And remember, Houston had other plans, 502, 503, 504, 506, for other benefits. We won't look at those. But this is a common filing, and a quick review shows me that the Houston Astros did this correctly. And they have correctly filed their 5500 as an employer sponsoring multiple ERISA plans and doing multiple filings. Now, let's take a look at a consolidated plan. The Houston Astros, an American League team, defeated in the World Series the Los Angeles Dodgers, a team that I'm a big fan of. And the Los Angeles Dodgers, as we pull them up and we see their retirement plan filings at the top, 001, I'm going to scroll down, and the first number in the 500s I'm going to see is 501, a calendar year plan for 2016, much like Houston, under the Dodgers tax ID number. The difference here, the Dodgers only have 501. They don't have 502, et cetera. So this tells me they've got a wrap plan, and they're filing all benefits under the Los Angeles Dodgers Employee Benefits Plan, calendar year plan number 501. I'm going to pull that up and try to expand it. So this plan doesn't on its face say that it's a wrap plan, but we know it is because, number one, they only have a single filing. This is a very large employer. The name of it, Los Angeles Dodgers Employee Benefit Plan, kind of connotes that it's including more than one benefit. And then also we can scroll through the filing and see that it includes a number of benefits. So this is page 2, and you'll see here a number of benefit codes are listed. Again, we've got some fully insured benefits. We have some self-funded benefits. The bottom shows that there are 3 insurance schedules, Schedule A's, and 1 Schedule C, which is something that's filed for large self-funded plans that have plan assets. This is very similar to Houston from here on out, except that it includes all the benefit plans of the Dodgers, so we won't don't need to look at all this in too much detail, but this first schedule is Aetna. It shows, who the broker was for the plan year, what the plan year was, the amount of commissions paid, the amount of premiums that were paid by the group. In this case, Aetna is stop loss coverage. The Dodgers have a self-funded medical plan, which I could tell from page 2 of the filing, and also prescription drug coverage from Aetna. The total premiums paid for the year, $664,000 for that coverage. And again, they have a self-funded medical plan, so that doesn't include those. Guardian is another provider of the Dodgers for several benefits. As I scroll down, Guardian provides dental, life, LTD, STD, and voluntary AD&D and life. So that's just to look at what. So again, the wrap filing doesn't look by itself any different. The main difference here is the Dodgers only have one. As I scroll back to the top, just one Form 5500 filing is due from the Dodgers every year. And again, it's a calendar year plan, so it'll be due at the end of July. That's a very quick look at those, but I thought you might enjoy seeing a couple of filings and scenarios. I'll pull back to the slides. So there are other scenarios. Some employers, for example, have multiple benefits, but only one of them is over 100 participants, and so they may only file one for one benefit. That's another common scenario, especially if there's a benefit like life or LTD that every employee who's full-time is in. But these three scenarios are fairly common as we look at what employers need to do. So some employers are exempt, like ProBenefits, from health and welfare 5500 filings. Some are filing multiple filings, like the Astros, and then many employers are using a consolidated wrap plan and only filing a single 5500 plan, like the Dodgers. The process, which I won't go into great detail on today, other than to say the process, if you use a preparer like us, is pretty simple. That there's the data gathering process, which is primarily company info, plan participant numbers, and then the schedules from the carriers. Then the forms are created and populated, which is something our team does, and we have a team here that prepares them. 2 people prepare them on a daily basis. We have enough of them to do that, and then Laura and I assist with some of the ERISA analysis for the plans. When the employer, typically the plan administrator, receives the email, for example, from us that says the form is ready, log in, review it, and once it's ready to submit, you can submit it. Our site is linked directly to the Department of Labor so that the plan administrator can use his or her EFAS2 ID and 4-digit PIN to submit it directly, and then it's done. And we'll confirm that it's been received and accepted by the Department of Labor, and we'll follow up with you next year to collect the data and whatever is needed. So the process is generally, once the forms are completed, pretty simple. And EFAS2 is fantastic, and we're fans of EFAS2 as well as the software that we use to prepare it. In addition to the Form 5500, employers are required to provide to participants. So the 5500 only goes to the Department of Labor electronically. The employer is required to distribute a summary annual report. And this is a document that is intended to be a summary of the Form 5500. And some of you have received these as employees in the past. It's intended to summarize whatever's on the 5500 in a one-page format that participants can have and, in theory, understand and digest. Now, no one really looks at the summary annual report, but since it's a requirement, we provide it. It's due to be distributed to plan participants by the end of the 9th month after the plan year, so 2 months after the Form 5500 is filed. And the SAR just mimics whatever the employer filed. I'll show you a sample here briefly. Again, this is something we create and make available. Summary annual report. It lists the plans that were included in the Form 5500 filing, the insurance company that was applicable, the amount of premiums paid by the plan, and then the participant's right to additional information. So is this helpful information to the participant? No. Does the participant really need to have this information? No, but it's legally required. So we do it, and that's something that we all understand. So that's the SAR in a brief nutshell. I'm not going to go into compliance considerations today. I mentioned the high potential penalties. So these filings need to be done, and they need to be done right. Employers that are making mistakes are typically omitting one or more plans that need to be filed that the employer either doesn't realize are subject to ERISA, or the employer just omits them somehow. Not filing on time is a problem. And again, as I mentioned earlier, employers that don't have a RAP plan but are filing a consolidated 5500 and even without a RAP plan in place, that's a common situation. How can we help rectify those issues? Well, if you use us for 5500 prep, for example, before we file the first one, we will do a full ERISA analysis. We'll look at what, if anything, has been filed in the past. We will ask you, tell us all the benefits you sponsor. Let's help you figure out which ones are subject to ERISA. And we'll make a recommendation. What's the best way to file these, separate or together? Do you have a RAP? Do you need a RAP? What's the right plan name and number and way to file this? What is required? So that's part of what we do. That's part of the role that Laura and I as benefits attorneys play in helping our team understand and do this ERISA analysis. Since employers miss filings all the time, sometimes they're a month late, sometimes a year late, sometimes 10 years late, and ERISA doesn't include a statute of limitations for penalties for later omitted filings. We are big proponents of the DOL's Delinquent Filer Voluntary Compliance Program, and we prepare a delinquent filing almost once weekly for an employer somewhere, somehow, who's forgotten to file or missed it or didn't know this was required. This allows the employer to raise its hand, and before the Department of Labor comes to the employer, discovers the error, and assesses the penalty, the employer goes to the Department of Labor and says, we've forgotten, we're going to file voluntarily, and this program allows a reduced penalty. I mentioned that max penalties could be up to $2,000 a day, which is preposterous but true. The voluntary penalty is only $10 per day, and it's capped at only 200 days a year, $2,000 per year, $4,000 per plan over multiple years. So this is absolutely the way to do it for an employer. Is it painful to pay a $2,000 or $4,000 penalty or times two penalty for a late or missed filing? Absolutely, but it's a lot less painful than having to worry about it and accept that risk going forward. So we highly recommend this, and this is something that we do a lot of work with employers in this area. We think that if there are any missed or late filings, recent or long since, those need to be addressed, and a meaningful and appropriate plan needs to be devised. I won't say any more about that right now in the interest of time, but if you'd like more information or to talk to us about a potential late or omitted filing, we'll be happy to assist you. I'm also not going to say much more about our 5500 service other than it's the best. And I say it's the best because I'm proud of my team, particularly Kelly Turner and Scott Littleton, who work daily with 5500s, and these guys are pros. They prepare these forms. They know it in and out. They've devised a highly automated process and system for these forms being created and filed, and we really try to minimize the impact on the employer and the plan advisor beyond data collection. And we're proud of our service. We think it's very good. It's also very inexpensive. The average employer that uses us for 5500s pays in the range of $450 to $500 a year. We actually charge by the schedule. This is well below market rate for the 5500, especially considering the automation and the attorney involvement in ERISA analysis. So we'd love to work with you on 5500 prep or your clients if we're not already. A final word, you all have heard us either last year at this time or otherwise, or you've read elsewhere that in 2016, still in the Obama administration era as far as the Department of Labor, a future change was announced that would take effect in 2019 and would eliminate the under 100 exemption for health and welfare plans, so that all health and welfare plans sponsored by a group and subject to ERISA would be filed. This would mean ProBenefits and other small employers would need to file not only under the current requirements, but also there would be a new Schedule J for group health plans that would provide more details and helpful information to the Department of Labor and the IRS as they enforce, among other things, the Affordable Care Act. This was proposed in 2016 and appeared that it would come to fruition. However, with the current administration and current leadership at the Department of Labor, while this hasn't formally been withdrawn, at least not to my knowledge, I think it's very unlikely this takes effect next year. So we'll certainly keep you posted. But as of now, there's no imminent change in the law for 2019 as far as the under 100 exemption. My guess is the Trump administration will either eliminate or delay that, but we'll certainly see that going down the road. Otherwise, I'm going to end the presentation portion of this now. Thank you again for your time today. If you either have submitted a question or would like to submit one in the next few minutes, go ahead and do so. We're going to move now into handling those questions in writing through the question box. So if you have submitted a question, you want to hang around for the answer, or you want to enter a new question, I'm going to be answering questions for probably the next 10 minutes or so. Feel free. Otherwise, thanks for joining us today. Hope you have a terrific afternoon. And as always, if we can help you, let us know. Thanks and have a great day.